Start with the AHCA. The CBO coming out yesterday warning that potentially 1/6 of the population resides in areas in which the non-group market would start to become unstable beginning in 2020. Explain this for us, how the AHCA could theoretically destabilize so much of the market.
Look, there's so much bad news in the CBO report, it's hard to know where to start. But I actually think you're starting with the single most important part of that report, which is most of your listeners will have insurance from their employer or the government. And for them, insurance works well. Maybe it's a little too expensive. But if they get sick, their price doesn't go up. They can't be denied insurance. What folks may not realize is before Obamacare, that wasn't the case in the rest for people who didn't get insurance from their employer. If you bought insurance on your own and you got sick, they could raise the price through the roof or just deny you insurance altogether. That ended on January 1, 2014. And this bill, this Republican proposal, would reintroduce that discrimination in insurance markets, allow states to do it. And CBO estimates that 1/6 of the population would reside in states that would reintroduce discrimination into insurance markets. It's really tragic.
It's similar to how car insurance companies will deny you coverage or raise your premium if you get into an accident or you make too many claims. Professor Gruber, to what extent did Obamacare play out as you anticipated, the unrolling of it, as you look back X number of years?
So basically, I think Obamacare played out pretty well. I think in terms of insurance coverage, it played out very well. I think in terms of cost control, it played out very well. One thing we don't talk about enough is actually healthcare costs over the last 7 years have actually increased at a historically slow rate. I think in terms of the exchanges, it played out pretty well. Remember, 85% of the people in the exchanges are subsidized, so they don't pay the premiums anyway. The federal government does. So we're talking about 2 million people who actually pay the premiums in the exchanges, and I think they've gone up more than we would have liked, but not tragically so. If you look overall, since Obamacare has been introduced, premiums have gone up 7% a year on the exchanges, compared to 12% a year before the law started. So it hasn't been a disaster. It was actually trending positively, but then Trump came in and he's basically caused such uncertainty that really he's causing the law to do a lot worse.
Now, we're looking at a chart. You can't see it. A growing number of people around the country don't have much options on the exchanges. Yeah. We can see the percentage of people who have just one insurer on the exchange, so basically an exchange monopoly. In some places, there may not be any. Definitely some ongoing architectural issues related to these exchanges.
Jonathan, we were all focused on the CBO report yesterday, but I want to point to a report from the Health and Human Services Department and what they said yesterday too. And I'm going to read it because I want to get the facts right. They said that the average premiums in the individual markets have increased 105% since 2013 in the 39 states where the Obamacare exchanges are federally run. That translates to about $3,000 more a year for the average family. That doesn't sound like an Affordable Care Act to me.
So, okay, a couple of things. First of all, going back to the map that you showed, having one insurer is not a problem. It's not like people just have one plan. They have a variety of plans to choose from that insurer. Having zero insurers is a problem. But before Trump came into office, there was nowhere in the country with zero insurers. Only since he started messing around with this law have we created zero insurer areas. Now, when you're pointing about the premium increase, that 113% fact is totally wrong. If you look at the actual premiums since Obamacare has been passed, they've gone up about 25% total over 3 years. The way they might have gotten that number is by finding the various healthiest people who before the law could benefit from a discriminatory insurance market, which kicks sick people out. Yes, it's true for the various healthy people, for the very healthiest people, premiums have gone up a lot. And that's because they were essentially benefiting from discrimination and they no longer get to.
But $3,000 a family, if we're looking at that, is a lot for many. And actually, there are many middle-class families out there that are saying that they suffered unduly under Obamacare. It's not sustainable.
Look, that is absolutely wrong. Let's be clear. First of all, the vast majority of Americans were not affected by Obamacare. Okay, if you had employer-sponsored insurance, it didn't affect you. If you had government insurance, it didn't affect you. If you bought in the exchanges and you had a government tax credit, it didn't affect you. So the most people that could have affected by this is 2 million people. Okay, and for those people, if they were previously healthy and young, their premiums might have gone up a lot because essentially they were benefiting from a discriminatory insurance market. Now, if we feel that we're okay with discrimination insurance markets and we'd like young, healthy people to pay a lot less than older, sicker people, well, that's a debate we can have. I don't agree, but that's a debate we can have. But what we can't do is pretend that you can have it both ways. We can't pretend we can lower the rates for the young and healthy without raising them for the older and sicker.
Well, the ball is now in the Senate's court, right? Because they need to write their version of the health care bill. I wonder what you think of one alternative that's been proposed, a hybrid plan, kind of like what Singapore has, that's built around personal responsibility and private spending. A high deductible, for instance, so that individuals need to watch their costs and avoid unnecessary expenses. You also have a single payer system for catastrophically large medical expenses. Do you think that there's any kind of healthcare plan that could contain elements of this model that would fly in the U.S.?
Look, there's a lot of alternatives we could consider, but here's the simple fact, okay? There is nothing more conservative than the Affordable Care Act, which does not either cover a lot less people or cost a lot more. So whatever alternative you want to look at, you have to recognize that any alternative Republicans would endorse, anything to the right of Obamacare, will either create a lot more uninsured or cost a lot more money. As long as we acknowledge that, there's a range of things we could look at. Okay, but if you actually want to save money without creating more uninsured, you got to move to the left in something like single payer. If you're going to move to the right, you're either going to create a lot more uninsured or cost a lot more money.
Let's imagine a completely separate, an Earth 2, so to speak, where Hillary Clinton had won the election and had large Democratic support in Congress. And there was a discussion going on right now about how Obamacare might be strengthened. What would you propose?
Well, I think the main way Obamacare would be strengthened would be to actually implement it as it was written. So Obamacare was written with Medicaid expansions, which 19 states haven't done, leaving sick individuals in the health insurance pools. The other thing could be done would be to actually honor the reinsurance payments that were promised to insurers. Insurers were supposed to get about $8 billion in what's called risk corridor payments. Republican Congress refused to make those payments, and that's why a lot of insurers lost money. So the first thing I do is actually implement the law as written. If that wasn't good enough, I think that we should put a little more money into this law. I think that probably with another small amount of money, much less than the Republicans are talking about cutting taxes, maybe $100 billion over 10 years, we could do a lot to stabilize and lower premiums.